This
Yeah, you forgot.
conference will now be recorded.
Mhm.
And yeah, you forgot to tell me to record the conference. Falling out.
Oh, sorry. Well, you
Okay,
haven't said nothing much.
so I'm gonna record these, and then hopefully they'll be available one way or the other. They actually make 4K movies, and so I'm gonna have to try to upload it in YouTube, but I'll give you more information on that. Okay, going back, this table depicts what we just finished working with. Uh, on the vertical axis is the profit loss, and on the horizontal axis are the units sold. And so what this shows is that there's a point, break even, where if you sell that number of units, as you just finished on that exam, your net income was zero. If your units fall short and you were told to come up with $100,000 loss, your units will be down in here and your loss will be somewhere in here. Then when you got ready for a profit, say of $1 million, your units have to go over here. So hopefully this is a good depiction of what you're working with, what we're working with. And this is the starting point of the project. And these are those formulas that you were told to memorize.
Mhm.
And we'll be using those throughout. In a typical situation on the in-class exam, you would not have these formulas. Okay, let's look at the master budget process. And we reviewed this last time, and we talked about the assumptions for a bookstore that was selling books. And with most companies, a lot of their sales in the last quarter. It's just the way retail works. And so we prepare a cash budget because even at the end of the day, if we have net income of 2 million, we're not going to be in our location if we don't set up a line of credit. So in those short months, we can borrow money to cover expenses until we get to that final quarter. So typically most manufacturers and most retail companies are going to prepare this budget. And this is your major takeaway for the semester. Last semester, it was preparing those 4 financial statements. Now we're looking at preparing projected financial statements that you will utilize when you create a business. So last semester was always historical. You know, everything had occurred, the company was operating. Now we're moving to projections, what the statements need to look like before you start operations. Okay. Now this is, simple situation because the book is already made and we're just selling the book. But now with your project, you've got to make your project. So the process is a little more detailed. And you have to create a sales budget. Did everybody see that pretty well?
Yeah.
Okay. Which we'll work on today. Then you have to do inventory, production budget, selling administrative expense budget, direct materials, direct labor, manufacturing overhead, and finally a cash budget. And on this cash budget, this is where we determine whether we have to borrow or not. Then we do a budgeted income statement and a budgeted balance sheet. There's a beginning balance sheet, then there's an ending balance sheet as you go through your years. A minimum of 3 years for everyone, 4 to 5, depending on how many individuals are on your team. So as you work with this, you need to get your Excel spreadsheets in good order. And then as you move to the later years, it's pretty easy to fill in those sheets, but you got to be in Excel. for a number of reasons, especially if you make errors. If you make errors in Word, that's not going to work out. So the requirement is that you're in Excel, because you'll be submitting to me in Excel. I'm going to be reviewing in Excel. So this is the master budget process, and each year you got to prepare all these budgets so everybody on your team has a year where they have to do all of this. Okay. So we prepared the budget. At the end of the day, we have a cash budget, an income statement, and a balance sheet. Now, to get to the income statement and balance sheet, uh, you were told how to do that starting in Principles 1. And you know what? You make journal entries. You post to the ledger, and after posting to the ledger, you do a trial balance, and those financial statements fall out. So in our process, as we're doing these budgets, coming out is going to be an amount that goes on the cash budget and journal entries, so that we can get all of that prepared, and it will all tie in. So that's one of the keys. A lot of times, if you don't have a closed process like this, the information won't tie together. But when we get a cash budget and we're at the end of the period, at the end of that fourth quarter, very important, the balance on your cash budget, the ending balance, has to be the same balance as the cash on your balance sheet.
Say it one more time.
I'll say it again. When you prepare your cash budget and you have the ending balance, quarter four, when you get ready to do that balance sheet, that same number has to be on the balance sheet. And for the third time, when you prepare your balance sheet, the amount of cash on that cash budget has also got to be on the balance sheet. So that's one of your checks to make sure you don't have any errors. The other check will be that income statement based on your journal entries after the first year has to show a loss of how much?
100,000.
100,000. So the journal entries have to move you to that. Okay. So we'll be working with the sales budget, and you got detailed information on how to do it. And that's all we're working with today, the sales budget. Then you will look at this and you will be quizzed in terms of completing the sales budget. Okay, so you're going to have to complete that sales budget. So this gives you the information that you need to utilize. There are operating steps for each budget: production budget, raw materials, and cash payments. And you've got to have a raw materials budget for each raw material you have. So that's why I was telling you, if it costs less than $1, put it in overhead. Direct labor budget, manufacturing overhead budget, selling expense budget, administrative expense budget, capital expenditure budget. And what we're looking at here are the journal entries that you're going to be making. So for each budget, you're making journal entries. And as you're making these budgets, at the end of the day, when all these journal entries are made for each budget, that cash on the balance sheet and cash budget must agree, and your net income based on your trial balance has to show a loss of $100,000.
Exactly,
Okay.
or exactly?
But no, it's based on, just like it was on the examination. You should
Okay.
be within $100.
Okay.
You're outside of $100, then something is wrong. Use whole numbers, don't round. So here we are on our master budget in-class problem. You're supposed to look at this and have worked it out. The assumptions that you see here are the assumptions that you would need for the project.
Same number.
all of these assumptions. You got to have quarterly sales. You got to determine your selling price and make all your sales credit sales. If you don't, it's a little more complicated. You got to show your collections. Since you're selling on account, some sales you collect in the quarter, other sales you collect the next quarter. So I got month here, that should be quarters. You got to have a desired ending inventory. Then you have to have your assumptions about your raw materials, what they're going to cost and how many is needed. Then you have to pay for those raw materials. And you can use a lot of these assumptions. Your assumption for direct labor, your assumption for manufacturing overhead, and that depreciation that you're calculating, you have to have that. Selling expenses, a percent quarterly. Administrative expenses and the depreciation related to that. Your initial cash, everybody starts with $200,000. The minimum cash required is $100,000 each quarter. So everyone has to have $100,000 each quarter. And you purchase your equipment with a note. So this is the note here. And here I lay out what the interest and principal is going to be each period. So you need to come at some point, prepare this. Now you're supposed to be turning in part 2 of the project when?
Tomorrow.
Tomorrow. And so you need that complete, because then that leads you, to a lot of this information here that comes in part 3.
I have a question.
Yes.
Are you going to correct the project if it's wrong so we can know? Or are you just going to assume it's right?
I'm going to correct your assumptions when you send those in. And you're supposed to have in those assumptions everything that's there. You got a template, but you're also supposed to be developing me a strategy of how you're going to sell online. So I'm going to look at all of that. Look at the, a copy of your project. You should have and of course, you got to make this project
Mm-hmm.
and deliver it to me at some point, maybe after the semester. But you got to have it made and you got to show it to me when you present it. So when you do your final presentation, or you can do it, you should be ready to do it when you present the first year. So that's a good time. You have that project made so you can show it to me.
Okay.
Okay. And of course, I created this for you so that as you working, you can do a quick check to make sure where you need to be. So this is a good little check in terms of what you'll be doing. And this helps you preliminarily check to make sure you're where you need to be. Similar to the assumptions, I just have it in a different format. So when we work today, this is where we'll start. So you should have this create it so you can work along with me. Because eventually, this is how your final exam looks and how that quiz looks. You're going to have to do this. And everybody will have their own quiz, their own numbers. Okay, sales receipt journal schedule. And there are schedules like this that you have to fill out. And so we're going to fill it, and this is all we're working with today, the sales budget and cash receipts. And once you get this down, then you're going to turn me in as a quiz, the sales budget and cash receipts for your project. So we're doing 2 things. We're working on the first, the third period, but we're also working on quizzes. So you don't do kind of outside things at this point. It's all tied to the project. So if you keep it up and doing what you need to do, then you should not have any problem. but there is an expectation that you can, really create financials like this. It's just very important. There is a production budget, there's a raw materials budget. So all of these budgets have to be completed. Manufacturing overhead, selling expenses, administrative expenses, capital expenditure, all of those budgets have to be completed each year. And then there's the cash budget, where we bring over the amounts from those budgets, and we'll show how that's done to determine whether we need to borrow money or not. So the bottom line is preparing this cash budget, a little more complicated, but numbers come in for each of these sub budgets, and we're just going to be at the top of this today. Like I said, it's just like Principles 1, but we made those journal entries. So we're going to be at the first part of our process today, working with the sales budget. Once we get that done, then we'll be able to run on through. So of course, once again, this is how that quiz looks. This is how the final exam looks in terms of what you got to do for a year. And here are the journal entry sheets. So you should have journal entry sheets out. Plan to work with them. You should have this master budget quantity solutions out. You had it on the exam, you should have that. And you should have your sales budget. Okay. Okay. So let's look at and let's review what it says about the sales budget and how we do it. The purpose of the sales and cash receipts budget is to determine the total sales as well as the amount of the quarterly cash collections. You determine the total units sold based on that cost volume profit formula. And so we at the target loss. So that's the first thing we do. Then we work about quarterly percentages. We calculate the sales quantity by quarter, insert that predetermined selling price, calculate total sales by quarter. Using a predetermined bad debt percentage, calculate the amount of bad debts. Utilizing predetermined collection percentage, calculate the quarterly collections. Total quarter collections is going to be the sum of cash sales, which I told you not to have, and then collections for the current month and prior months. We will transfer the quarterly collections to the cash budget. And then we will make the following journal entries with the sales budget. First of all, at 200,000, we're going to make this entry. And everybody should be able to make this entry. Then for the sales, we won't have cash sales, so it'll just be debit and accounts receivable and crediting sales. Then we're going to record the bad debts. And then we're going to record the collections of the receivables. And this is all done for the whole year. So you add up all 4 quarters for these numbers. And then, as you know, when we sell something, we have that companion entry where we debit cost of goods sold and credit finished goods. And I give you what you need to do to get that dollar amount. It's going to be the quantity sold times the unit direct materials and direct labor costs only. Unit direct materials and direct labor costs only. And for the third time, unit direct materials and direct labor costs only. That's all we're working with today. Okay. So the first thing that we've got to do is prepare the schedule. So I'm going to give you all about 10 minutes You're to look at these assumptions as you were supposed to on your exam. And based on these assumptions, and you're given the selling price here, based on these assumptions, I want you to fill the schedule out for 2 years. Target loss of 100,000, break even. So you got to calculate selling price, total variable cost, get your contribution margin, your fixed costs, and give me these quantities. You just did on your exam. And these quantities, if you do it right, they should be whole numbers in this example, not necessarily. So get to work. Any questions?
Just the quiz.
You said do what year? Well, I mean, what quarter?
You're getting your total amount. So you're doing what you did on the exam. You telling me to break even what the quantity would be. I mean, excuse me, if you lose 100,000, what the quantity would be, and if you break even, what the quantity would be. So you're taking about 10 minutes to calculate these numbers based on the assumptions that you have here.
But for which quarter?
For the year, this is
Oh, for the
all
whole
year
year.
right now. So
Okay.
see if you can put when is now selling price $500.
Oh, because it's all okay.
So now put it over here for you too. All right, time for you all to work.
Okay.
Did you upload this document?
Yes, I did. So you got the selling price information. So we're now at your raw material assumptions and your labor assumption. So go ahead and do the top part.
What did you name this assignment on course content?
I think it's a master budget insert.
Hmm.
Hey, what numbers y'all using?
Lord.
You said that he said the assumptions. What assumptions are you using? Where
It say assumptions. It's right under say problem 1. Then it say assumptions. Go down. Page 12 on the thing.
I see blank. Some.
What? It's on page 12, not in the book, but in the document.
Yeah. All right.
For your selling expense, did you get 150?
Hold on.
All right, we're on the clock. Let me hear something.
What?
Let me hear something.
30%. I don't see no interest.
There's entries on there.
Where? Oh, I see, sir.
It's at the bottom.
I see it.
But Jonathan, what you got?
You said 10 minutes.
Did I say that long?
Yes.
All right.
Yeah, did it.
What are y'all looking at?
I think we're looking at the practice problem.
What did y'all use for labor?
Blackboard. Coming up with our quantity solutions as we did on the last exam so successfully.
Where are you getting it? I don't know. Can you tell us what the selling expense is?
Where you?
I did 30% of the 500 and got 150. Is that right?
If
Yeah.
if it's from 500, yeah.
Yes.
Okay.
What y'all get for labor?
For what?
Labor.
1.
Yeah, it's 20 divided by 20 is 1.
I can't even find where they were.
It says 20
Except the
bucks per hour, $20 an hour.
Never mind, I found it.
So is the total variable cost 400?
It's your
I mean,
problem.
the contribution margin is 400. Is that
I
correct?
didn't get that. What? So for the ink, you did
Because I thought
5
contribution.
times
Ink
10.
cartridges at 10, right?
You said, huh?
Ink is 5 ink cartridges at 10.
Yeah, that's 50. Paper is 7
What?
and 7, right?
Yeah.
That's what?
49.
hmm And then 1.
Then that 1. No,
Then
I
that's
didn't mean
it.
that for total variable cost. I mean contribution margins to be 400. Because
Mine
isn't that selling price minus variable cost? Or I'm
No.
tripping.
All right, what's the selling expense?
150.
150.
I got 251 for my contribution margin.
I need a number here for bad debt.
I don't know that.
I don't know that
Oh.
either.
I'm confused on how you supposed to get bad debt. It don't say nothing about no bad debt.
Says collections, month of sale 40%, month after sale 50%. It
Where
looks like 10% you're not collecting.
what? Where you see that? Oh, collections under collections.
40% month of sale, 50% the month after sale, but evidently 10% not being collected.
So bad debt is 10% of 500.
Mm-hmm.
Okay.
So we add these variable costs together, how much do we have?
Okay. Let me change. It's 50.
So bad debt is $50.
Yeah, that's what I got.
Okay.
Can you add the total variable
It's
cost up?
50.
300.
It's gonna be on both cases here. So what's our contribution margin?
Isn't it
It's
still
300.
400?
How do we get the contribution margin?
You do selling price minus variable cost.
So what's 500 minus 300?
It's gonna be 200.
100.
300 from. Oh, okay. Sorry.
Yeah, where did you get to? He said,
Oh,
where did
because
you get to?
it's the
500
total.
subtracted 300. I thought y'all was doing this the other day.
I'm
Never
tripping.
mind. Never mind.
Okay. Manufacturing overhead quarterly is 25,000. So for the year, that's gonna be 100,000.
Wait. Hold on.
Fixed cost there.
50.
So the manufacturing overhead is 25,000 a quarter. That's all we're concerned with right now.
I'm
So
not doing it.
right here, 25, 25, 25, 25. Add
Okay,
those four numbers together, how much might you get?
that's 100,000.
But you only put in 25,000.
You put in
So
100.
you put 100,000 for the whole year.
And do you think y'all can put administrative expense and interest expense in for it?
Yeah, I got that part. I was confused
What's
about
the
the time.
administrative expense amount?
200,000.
Is that right?
Yeah.
Okay.
I see where you seen that.
You have
What's
to.
interest expense?
It's 100,000.
All right, I'm trusting you to be right here.
You said you don't trust me to be right.
I'm trusting you to be right.
Oh,
I
Our
see. No.
total fixed cost is what?
the whole fixed cost is 400,000.
Mhm. So now, can you calculate for me the quantity to lose 100,000 and a quantity to break even? Can we calculate that?
It's gonna be 750 for the loss. Again. And then to break even, it's 1,000. Oh, I did that
Don't
test.
y'all strain too hard.
Huh?
Don't strain you too hard. But what's the quantity that you gonna make?
750.
How much?
750.
How'd you get 750?
You do 400,000 minus 100,000 divided by 400.
No.
It's divided by 200. It's gonna be 1,500 for the quantity.
Thank you.
Wait, what?
What did you do?
Tell them. Whoever spoke up, who's that?
I did 400,000 minus 100,000 divided by 200, and you get 1,500.
Where you get 200 from?
That's the contribution margin.
Yeah. Can you name?
Oh, I thought it was 400. I'm tripping. I'm sorry. So 400,000 minus 100,000 divided by
Hopefully you see why I'm having you to write this down. If you just watch me work it, you'll just make assumptions. How much over here to break even, Andrea?
100,000. What?
it'll be 2,000.
Oh, okay.
Can we do that test over?
He said, "Oh my God."
The total loss would be 1,500. Then the break even is 2,000.
These are the quantities. Now do my calculation down here to prove it.
How the hell you only know you got the point?
You got to
Do the
use the
calculation
formula.
down here and prove it.
Times
That
5.
those numbers are right.
It'll be 750 for sales, right?
Using your numbers.
Oh my God.
What else?
That was right.
I'm assuming you can multiply 500 times 1,500.
Okay, so that's 750 minus the 300. Then 200. 400,000. Let's see.
How much is 300 times 1,500?
750.
What? 300 times 1,500. How much is that?
Oh, 450. Sorry.
Our contribution margin is how much?
200.
Oh, is this maybe 300,000?
I'm so confused.
I don't know why. Fixed cost of what?
400,000.
So what's our situation in this first year?
I don't like how you put this.
For what?
What somebody said about the exam. And like how I put this.
It looks so like weird.
Do it any way you want. The same thing. Sales, less variable cost, contribution margin, less fixed cost, net income. So we just put it in an organized way.
So contribution margin is going to be the 300,000 because you do 1,500 times the 200 minus the
Or you can just
400,000.
subtract these numbers, 750 minus 450.
So it's gonna be a negative 100.
Now see if y'all can go over here and break even.
Okay, sorry. What did you do to get the contribution margin? You said 1,500 times what? So I see you have 300,000 now.
We simply took the quantity and
Mm-hmm.
multiplied it by 200.
Oh, okay.
Or you can take 750 minus 450.
Oh, okay.
And you did that to find what again?
Contribution margin in dollars. You can take the sales less variable cost, that's contribution margin, or you can multiply 1,500 times 200.
Okay.
I'm still. I don't know how to fuck.
So we took the quantity, multiplied it by the selling price, get 750. Then we multiplied it by the variable cost 300, get 450. Then we multiplied it by the contribution margin to get 300.
300,000.
Okay, so how you get quantity? That's the only thing I don't
Multiplied
know.
by the selling price. We multiplied by the variable cost. We multiplied by the contribution margin. So we get 750, 450, and 300.
For quantity?
What?
To
Quantity?
get the quantity, you have to use that formula.
Oh, I forgot.
You get off.
All right, go ahead and break even, please.
It's gonna be 1 million for the sales, and then 600,000 for variable cost, and then 400,000 for contribution margin minus 400,000. It's gonna be 0.
So we break them. So this is something you do on a test. You do with your project to make sure you checking, because you don't want to do all this work on these schedules
Mhm.
and you have a problem.
I have a question.
Yes.
Can we do that test over from yesterday?
I have to grade it. And Prudence, are you there?
I did the whole top part wrong.
Professor Boyd,
How did they do on the test?
haven't even started on it just yet. But one
See,
of your students
Don't start
sent
on it.
me,
Just give us.
girl,
give us the test
I'm
back.
about how see, yeah. Someone started this exam, said she had difficulties submitting. I was like, fine. I opened it up again. I was like, you know what, go submit. Tell me why she's sending me an email today saying she's just seen my email from Tuesday. If she can, like, what should she do now?
Oh well, having
Y'all
that way going west. These are our quarterly sales percent, and I'm gonna copy them. And I'm gonna put them here.
Okay, just stop right there. Let us do that part.
So I went up to my assumptions,
Mm-hmm.
which were 10, 20, 30, 40, and 100.
Mm-hmm.
And I just dropped those down to the sales. Any question?
Can you post the solutions in Blackboard when this is over?
Of course.
Thank you.
Now, what goes right here?
Right where?
The
Right here.
quantities that you found?
What?
The total quantities?
Mm-hmm.
Okay.
How much do you think that is?
It's going to be 3,500.
No, bad guess.
Huh?
Anybody else? I'm gonna go up
That's the
here
total quantities.
and see what quantity I came up with, which is 1,500.
Mm-hmm.
And I'm gonna drop that 1,500 right here.
You said total.
I said total sales quantity.
Wouldn't that be
Quantity,
And what do you do with the 2,000?
right?
that's for next year.
Oh.
Oh, that makes sense. That makes sense.
Oh, so we do this twice.
And then a third time for $1 million, and a fourth
Oh.
time for $2 million, and a fifth time for $3 million.
So the quarters aren't years. It's like, oh, okay.
So we're doing 1 year. Yeah, you do. So these are quarters.
Okay, so every one that we had, so the total loss break even target. Oh, you know what? All right. All right.
Everybody's got to be working.
All right.
So now I need to break my sales down by quarter.
Mm.
So what's going to be here?
So you're taking 10% of the quantity, right?
It'll be 150.
What's going to go here?
150.
It'll be 300 right there.
20%. What's going to go here?
150.
450.
450. You adding up.
You're taking the percentage each year or each quarter.
What's
Oh,
coming here?
600.
300.
600.
300.
600.
It's 600.
20% of 1,500 is
We
300.
yeah, it's
You're not,
paid.
yeah, number 4, baby.
Huh?
We're at
Look
number 4. 40%.
Quarter 2 or quarter 4?
Or
You already finished quarter 2.
40%.
Oh, hell. I'm
So
going
you put your
slow.
percentages in, and then the sales quantity, and you can see it might need to be correct because you're allocating the cost. Now, what did we say the selling price was?
500.
Those.
He really sitting back chilling.
Doing this, huh? I should have been doing this earlier. I could have been at home.
Ooh, man.
Okay. So now what do you think we got to do?
Add them together.
Multiply?
What do you think we're gonna do now?
Is it
If
2,000?
total sales for the first quarter, what do you think I might do?
Multiply the quantity by the selling price?
Right, 500 times 150. How much is that?
it's 4 or 500. I thought it was 4 quarters.
500
75,000.
times 150.
75,000.
Sales times the price.
So that's how much?
75,000.
All right, 75,000.
It's 4, and it's just 4 quarters.
Yep, fourth quarter. How much for the second quarter?
150.
50,000.
How much for the third quarter?
200,000.
How much for the fourth quarter?
300,000.
300,000.
And so what are our total sales?
750,000.
Then I'm gonna put a JE here. What do you think that JE means?
Journal entry.
We're gonna make a journal entry for that.
For the whole thing
Or just the total?
or just the total?
Hey,
That's the total.
450 times 500 is 225,000, not 200,000
Uh-oh.
for the third one.
This is how much? You got it there.
225,000.
It is 225,000.
Thank you.
No problem.
Yep.
Okay. And all of our sales are credit sales. So I'll copy this.
Wait, did you say that we have to make the journal entry for the total or for each individual quarter?
Total.
Okay.
The total.
What is it?
Total. So you copy it.
Why do you have a 500 in total sale price?
Why do I have what?
I thought it was only 4 quarters.
What's the total? Quarter 1, 2, 3, 4.
No,
What are you saying?
sometimes.
It's breaking up.
Just the line for selling.
Well, we just put the selling price. So we just, and these could check. We'll make them all.
Whew.
All right, let's put our bad debt. And the bad debt.
50 for
10%.
every quarter?
The bad debts are 10%. So we'll have 7 here.
Oh. 10% of credit sales?
So we're just taking 10% of the sales number.
Okay. And that will change, right? It depends on whatever it tells you.
But you got your project that you're utilizing.
Okay.
Yeah, you just look at the collections. And so the total bad debt is 75,000. And guess what? We're going to put a J here, E here also. So that's telling me make a journal entry. What's that journal entry going to be?
Bad debt expense. Cash, credit.
Most time journal entries have 2 components. That's an adjusting entry. So what do we know about it?
It'll be.
They don't involve cash. Right? All right.
I can't read.
Let's look at these collections for a moment. And it says we collect 40% for the month of sale and 50% the month after sale. So I'm going to put 40% here. And of course, these are quarters. All right, so when I made my sales of 75%, I need 40% of that number here. How much is that? Oh, everybody's speaking. So it looks like it's 35,000 since y'all so quiet. Okay, so I collect in the first quarter 40% of my sales, 30,000. I collect the rest of the second quarter. So when you come to TSU, if you want a deferment, you have a bill, say 5,000. You might pay $2,500 now. Then 1/2 in September, 1/2 in October. So you have a total, but it's paid. So we got a collection 7,500 of it we're not collecting. 40% we're collecting in the first quarter. Then when we get the second quarter, how much we're gonna collect? Hold on, I'll speak at once.
60,000.
You're collecting 50% of those numbers.
Oh, okay.
That's something like 37,500. Okay. So for the 75,000 in that quarter, 7,500 was not going to be collected, and 30,000 is collected. The next quarter, we collect 37,500. Now let's go to the second quarter.
Wait, huh?
Just where the sales were 150. So we're going to collect 40% of that in the first quarter. Are we going to collect 60,000?
Wait, why you put 37,500 under quarter two?
So that's when we got it. We got 30 of it in quarter one. The balance of it we get next quarter.
Confused.
So
Okay.
quarter two, when we make sales 150,000, collect 60,000.
What?
The balance of it we're gonna get in the third quarter. So we're kind of going, you know, boom, that counter corner movement.
Okay.
Now, what number's gonna go right here? We're collecting 40% of the 225.
90,000.
All right, I'm gonna take out for 90,000. Now you all do the fourth quarter to show me the collections. Y'all calculate it and tell me.
I'm confused on how you got 37,500 for
Because when we made the
quarter
sale,
two.
75,000, 50% of this money is collected in the second quarter. Just think about it.
So you're just adding the
So would it be 11,250?
yes.
I
Because you're
get
just adding the 90,000 plus the 22,500.
Hey man, I just want fourth quarter.
Oh.
For the fourth quarter, the credit sales are 300. How much of this am I collecting?
40%.
At 120?
Yeah, it's 120.
Yeah, 20.
Well, you're getting the numbers wrong. And then in this block here, I'll be calculating what?
50%
50% of this
one
number. So that will be what?
150.
Now, 225 times 50% is what?
Oh, the
112,500.
11,250.
Oh, I get it now.
That's 112,500, correct?
Yes.
All right, so we need to add them down now to get our total collections. So in the first quarter, we're collecting just 30,000.
30,000.
How much are we collecting in the second quarter?
9750.
7,500.
100. How much in the third quarter?
165,500.
And how much in the fourth quarter?
232,500.
So what are our total collections?
Ooh,
Can you add those four numbers for me?
it's
30,000
525,500.
plus 165,500 plus 232,500. How much is that?
525,500.
Where did you get 75,500 if half of 150 is 75,000?
It should be 75,000. Thank you.
Oh.
Why it took so long to correct that?
So it's
Oh.
525,500.
So 30,97,500. I'm not in Excel because it's harder to kind of work with it. So I'm in Word. So
It's 525,500.
how much is this number?
525,500. I mean, thousand. Sorry.
525,500.
No, just thousand.
3 zeros.
Okay. Now I'm going to place right here
Journal entry.
JE
For the total, correct?
Yeah.
Okay.
Then I'm
Everything
going
over the
to
total.
add CB. So what this is telling me, two things going to happen.
What is
I'm going
CB?
to make a journal entry for these collections. How much of that journal entry be? Or what would the journal entry be?
525.
Give me the accounts. Type 3.
Cash accounts receivable.
Correct.
Cash
That
receivable.
was right.
Yeah, you're always right sometimes.
So
Okay.
cash accounts receivable.
Mm-hmm.
Oh,
So
I
we
was-
pretty much put the information there to make the journal entries. So we're going to do two things. First of all, we're going to go to the cash budget. I'm going to see if I can take these numbers with me. I'm going to copy them. I'm going to go to this collections. Let's see if they pays. Okay, they pays. So in these schedules, typically, whatever is on that bottom line is going to come over to the cash budget, which shows us our collections. And we know that we also would have here what? $200,000 for the money that we made to start the company.
That's gonna be everybody's starting number.
200 is.
Okay.
So the cash we have available is 230. And of course, on the disbursement side, that's going to tell us whether we got to borrow money or not. So we'll be going there next week, but right now, we're just here. So can everybody do this?
Yes. In Excel.
But what you want us to do?
So we started the process, and we got one other thing to do to make our journal entries.
So you can track them.
We completed the schedule by, first of all, calculating our quantity. Then once we calculated our quantity, we brought it in here. We brought in our assumptions, and then we determined the total credit sales, We determine the bad debts. We determine the collections.
Come on, shoes, Logan.
Brought these collections to the cash budget and put them in here. And then we put in our initial 200,000. So the cash available is going to be 230 as we look at our disbursements on Tuesday. Now we got to make some journal entries.
So we not doing cash budget today?
We just did it.
Well, what about all them other numbers?
We'll do those on Tuesday, but you all, since you're anxious, y'all can do them over the weekend.
I'm gonna just ask you, is this correct? How you do you just subtract the collections from the cash available from before?
We're going to add the cash available. Then all of these disbursements have to be total to see whether you got excess cash or you got a deficiency. If you got a deficiency, you got to receive a short-term loan.
Yeah,
Remember that this number must be at least 100,000. This number must be at least 100,000. But let's go make our journal entries and then we'll be done for the day.
The ending cash balance you said has to be 100,000.
At least.
At least.
At least 100. Okay.
So let's make our journal entries. We're going to debit cash. We're going to credit. Common stock.
200,000. We only gonna have like 5 journal entries, right?
That's all we got. Can y'all make the rest of them?
No.
Oh.
I'm playing.
The next one will be sales, right?
Mm-hmm.
So is it cash sales? 750?
We said the sales were on credit. So we'd be doing what? Debiting what?
Revenue.
Oh, goodness.
Accounts payable.
514.
No.
Debit account receivable. What are we crediting?
Revenue.
Sales revenue, okay. And what was the amount?
750. Wait, you said something is always credit. What'd you say?
The sales are all credit on account. Maybe I should say they're all on account.
Okay.
Let's put this bad debt in here next.
Bad debt. Expense.
And we're going to credit the allowance account. How much was that? 75,000?
Yeah.
Then our fourth one is the collections. So we're going to debit cash. And what we're going to credit? John, what we're going to credit?
Receivable. Account receivable.
That's correct. How much?
What was it?
How much cash did we collect? 525,000?
I got to throw all the way up. I forgot.
Monthly collections of 525.
Oh yeah.
We need one more entry. I'm gonna let y'all make that one. I'm working too hard. What's that final entry?
Is that the one we just did?
Is it cash available? Like it has something to do with the cash availability?
No.
It's
Go
just
back
that
up
it's
go
the
back up
cash
to the
budget.
sales. What?
The cash budget.
Go back
You
up
didn't
to
get
that discussion at the beginning of the sales budget where it tell you what the 5 journal entries are.
Wouldn't it be the same?
Finished good.
We're gonna debit COGS. We're gonna credit what?
We can't hear you. Well, I
Finished
can't hear you.
good.
Debiting COGS and crediting the finished goods inventory. And I'm not gonna tell you the amount.
Uh-oh.
I'm gonna let you figure out that yourself. So your
Wait,
quiz around Wednesday, so you can ask me any question next week, will be each team will complete all of this for their project. So you see you're working on the project, you're getting quizzed on it also. So it's counted up.
So what is this number?
I'm not gonna tell you.
Why? It's already hard enough.
Is it hard enough?
Well,
All right, go
yeah,
back.
talking through a screen.
Say what?
Talking through a screen.
I'm enjoying this, people can't just be talking loud. They can come and go as they so. And I got a record of it when they come in, when they leave.
Oh, Lord.
Boy, gonna be online next year.
Say what? Yeah,
Your class gonna be online now?
of course it's online.
I don't
Yeah,
like it.
that's good.
You don't like it?
It's cool.
It's okay. It's not good when it's like right in the middle. If it was like in the beginning, okay.
Oh,
I
it's
agree.
fine. Now I'll probably try to have office hours right at 11 o'clock on Monday. So that's the other good part of this. We can have the virtual office hours. 11 o'clock works for everybody?
Yeah.
So we got any questions?
Wait, on what day 11 a.m.? Because I got class 11 a.m. every day.
11 every day.
Yes.
But what time is that class in?
11:50 on Tuesdays and Thursdays.
We're talking about
No,
Monday.
Monday, Wednesday, Friday.
Okay. So I'll probably be on till around 12:30. So from 11 to 12:30. So if you want to, if you definitely need to see me, then you just email me or email Prudence. Plus, if you need to meet another time, we need to do that. Email me and give me a time, and I'll get back with you. And if we can, then we come back to this meeting room and we meet. So that's why I got the permanent thing. So we can meet at any time.
Okay. Thank you.
So what is our task for, like, what do you want us to do?
What
Our
you mean?
third part of the project?
So what?
Like, what's our homework, if there's any?
Your home? Homework for when?
Like, what is our task? Like, are we to do part 3 or start part 3, or we're just
Correct.
prepping for the
This
test?
is part 3. So you're supposed to do this. Do these journal entries.
Mm-hmm.
Do this part of the cash budget.
Mm-hmm.
And do this schedule. You want some more?
Before I start.
You gotta do this schedule. You gotta complete this. You gotta complete all your assumptions.
Okay. Another question.
Yes.
Can we do that test over? Please? Because I know I done messed up looking. I didn't mess up that much, but
You messed
looking
up.
at how we did it today, I messed up on that top part.
Mm-hmm.
I only messed up at the end.
I know, because I
good.
didn't know how to get
Still
back.
got a question. What's the equation for current?
I skipped that part.
Okay, we don't have time to go back and retest at this point, But remember, we talked about that you're gonna have this quiz on
On
what
the
did I say, 16?
I wrote it down just in case.
You said between the 14th and the 16th. You didn't pick a set date.
Okay.
I think
But
you said
What Prudence would do would be to look how you're performing on that quiz, and she will adjust it for that and make a
you said
request.
quiz is on the April 16th master budget, and then
Right,
the
but we don't have
23rd.
time to retest and stuff like that.
did you get my email, Mr. Boyd?
No, you say?
Did you get my email?
No, I may have, but I didn't read it. What did you say?
Oh,
I said for the test because the problem 3 and 4, I forgot to highlight it and I sent my answer.
Okay, realize I'm teaching 3 classes like this. Okay, so it's new for you all, but y'all sit back. But I gotta do all of this prep for the class and everything. So Prudence is kind of looking at the emails. We know that there'll be some adjustments because some people just have difficulty submitting the test. We know that, and we'll make adjustments. My goal is if you'll pass it at midterm, you'll be passing at the end. Okay, that's my goal. Just gotta do the
So
work and do what I tell you to do.
Okay, I got another question.
Not ask too many questions.
Okay, quantity. What's the equation of quantity?
Say that again.
3 of
What's
them.
the equation for quantity?
Jonathan, you tripping.
I don't forgot how to do it. Shit.
I sent you a picture of it. 3 of them.
I ain't see no picture.
Go look.
Where
It's
picture?
It's a total loss, target loss, and then what is it? The 0 one.
It is right there. It's in this handout today, right at the very beginning. And I told y'all to memorize this 2 or 3 weeks ago. See, y'all hard-headed. Y'all.
It's in your book too on page 280.
I taught Jonathan well. He tripping.
He ain't do.
Told you to memorize those formulas if you want to get your project right and pass the final.
I'm about to
All
send it.
I think.
So you just gotta be able to work in a hurry and everything and work with confidence. And so you just need to memorize those 3 formulas, especially break even going forward. People expect you to be able to calculate a break even.
I know I do.
Good.
He be shady.
So what about this last journal entry, this college
Make it.
finished goods?
Make it.
Oh, it says it right. Sales quantity times total unit
Here
direct.
are those 5 journal entries. So you
Oh, where it says?
gotta go and
Okay.
read. Now I got this. You have all of this material. So it's the first time I know you weren't reading, but now you gotta go through and read. Everything is laid out.
Mm-hmm.
So you ought to be able to make that calculation. Now, next class period, we go to the production budget.
Mm-hmm.
And we go to raw materials, labor, raw materials and labor. That's where we sort of go. So we're doing the production budgets next time, raw materials and labor. Then we will finish up with overhead, selling expense, administrative expense, and capital expenditures on next Thursday. And at that point, we should be pretty close to being able to finish the whole problem. If not, it might be the next Tuesday where we finish this problem. Now, in-class problem, you all supposed to be working the in-class problem. So I got you started today,
Mm-hmm.
but let's just see. Some assignments here. Production budget. Desmond, are you there? Anybody on her team? We'll let them know they got the production budget. Raw materials, Joy, your team. That's the first raw material. And Jonathan, your team has second raw materials.
Oh,
And direct labor, you'll have a volunteer for direct labor.
so we got paper.
Yeah.
Danielle has paper for preparation of operation budget.
Mm-hmm.
Danielle, you mean our group?
I'm a captain.
But still,
Okay, you in charge.
nah, you got
Yeah.
it.
Oh yeah.
So there are examples in the book. So that way I don't have to work as hard. And who's going to do direct labor? Williams, your team here. Okay, so you got your assignments now. It's all laid out. The journal entries and everything are laid out. The one thing about the production budget, there are no journal entries. So we'll see how each team is doing. If you have any questions, you talk to me a little bit during the office hours on Monday. And then I'll try to be on around 10:30 on Tuesdays.
Okay.
And I'm gone to 12:30 today. So you all have a glorious weekend. But a very industrious working weekend. And we will see you all in class on Tuesday.
Bye.
Bye.
Goodbye. Prudence, how we're coming.
Professor Boyd?
Yes.
Oh, I didn't know you at all. But when you have, can we go back over how to do this? I came in really late.
I can't hear you. Repeat what you said.
Joy.
I think she's gone.
For our product that we have to create, can we I know we have to put a picture on there what we created, but you said we have to also get you the final product.
Yeah, so when you present year one, you'll be showing me that final project. You may have to bring it to me at the start of next year. You should have that final project made and showing it to me.
Okay. I'm actually putting it together now. You can see
You
me.
got 2 weeks or so. Nothing else to do. How you doing, all those kids? How you
They're doing good. They're working on their assignments and staying busy.
Okay.
So yeah, I think that's all we have to do is finish our. Well, I'm putting together the tile right now, so and then we're done.
Okay.
There she go.
Yes, Miss Joy. I still can't hear you. So you're gonna have to email me, I guess. I don't know what you're listed as on. Yeah, you're listed as email me.
All right. Have a good weekend.
Are you too?
Bye.
Joy, we gotta get this corrected. You've got to help me. You got to get back to working and stuff. So you got to get your stuff cleared up. So work on your connections and everything, because you and Desmond, they've been getting off easy, but y'all got to start back to work. Okay. So how did it go, Miss Prudence?